Samso, where we speak with ASX companies and their MDs about the stories and what the business is about. We're at the UWA Club here in Crawley at the University of WA on a nice winter morning. Today I've got David Francis here from Province Resource Limited. David and I go back to probably late 80s. Where we both went to university together. David, look, you've done a fair bit. Maybe just give us an intro about what you've been doing, and then let's talk about green hydrogen.
Okay. Yep, thanks Noel. Lovely winter's morning. I think it's moved from 5 to 6 degrees now, so we're boiling here in Perth. Yeah, spent a fair bit of time, obviously as a geologist early on in my career, then moved more into the corporate side. Been there for probably 20 years now in corporate side, at least. And the latest play is we were the first green hydrogen company on the ASX, and that's what we're working on at the moment in Western Australia. Very large, second largest green hydrogen project in Australia.
I've been sort of been a fan of hydrogen for a while, and we a lot of people forget that. We here in Perth especially, I'm pretty sure in Europe is even more prevalent, is that we've had hydrogen buses then as well. And it's not a new technology, there's nothing new about it, there's no rocket science instruments about it, but it's new into the corporate industry. Would that be a fair comment?
Yeah, I think so, Noel. I think probably cost is the biggest thing that was put green hydrogen sort of in the back burner for a long time. Green hydrogen obviously requires renewable energy to produce, and the cost of renewables has been coming down significantly for a long time now, and probably on par with fossil fuel generated power now, which makes green hydrogen much more attractive.
As we sort of caught up before this conversation, hydrogen, green hydrogen, there's blue hydrogen, there's grey hydrogen. Maybe just give us the 101 hydrogen one-on-one on that.
Yeah, okay. Well, there's a whole rainbow of hydrogens these days. The main three, or maybe four if you count brown hydrogen, which is degasification of coal to methane, and then to blue hydrogen, or grey hydrogen rather. So the main three, grey, blue and green. So grey hydrogen is about 95% world's production currently, and all that really is splitting CH4 into carbon dioxide and hydrogen. Grey hydrogen, they make no attempt to capture the CO2, so for every tonne of hydrogen they make 9 tonnes of CO2, so very carbon intensive. Blue hydrogen is where they make some attempt to capture that CO2 that's emitted, and at a small scale that's probably okay, but at industrial scale that's, I think, it's been demonstrated quite effectively that carbon capture and storage doesn't work. So I don't think it's possible to change from grey to blue and be clean and green. So the only real alternative to the holy grail of fuel sources is green hydrogen, where you make no carbon either in the generation of the power, so wind, solar, geothermal, whatever your renewable power source is, splitting water instead of methane to hydrogen and oxygen. So no carbon generated, and then when you burn the resultant fuel, the hydrogen, then there's also produces water and energy, so no carbon there either. So it really is the holy grail of fuel sources. Okay.
It's fantastic to do all this. I guess from an investor point of view, people would be asking, so is this, I sort of know, but from your point of view, maybe you can sort of elaborate on it, is, how true tested is this technology? How true tested is, it's using grey. Is hydrogen?
No, it's not. It obviously acts the same once you've got the hydrogen there, but to get to the hydrogen is the critical path of producing no carbon to get there. So we're madly producing CO2 from burning fossil fuels of various kinds. Obviously that can't go on forever, and I think people have realised that now. So we need to look at other sources of energy, and green hydrogen really is the only one that doesn't produce carbon at all. So that's really the only way to go. And I think when you say it's new technology, it's not really electrolysis, which is splitting water with electricity into hydrogen and oxygen. It's been around for 100 years. So the technology is not new. So when there's no proof of concept technology required, it's the cost and the efficiencies of the electrolyzers on the hydrogen production side. So massive R&D has gone into the power generation side. So we've seen the unit costs of energy production, efficiencies and scalability of that go down costs and increase scalability wise. So that massive R&D money has been flowing into the electrolyser side now for probably a couple of years really, but more significantly in the last 12 months. And what we're seeing now is the efficiencies. Almost every day you see an announcement of some new discovery, or not new discovery, but new efficiency or scalability or price gain or some other technology that's applicable to electrolysis. And there are various kinds of electrolysers around. So I think what we'll see over the next 5 to 10 years is that the same thing that happened with the renewable power side is that efficiencies, costs and scalabilities will all improve on the electrolyser side as well.
I think that's interesting because when we think of solar power, I remember almost 10 years, well, not quite 10 years ago, the onset of everyone, let's go get some solar panels on our house. Yeah. And the cost and the variability of efficiency of panels has dropped dramatically, right? Yes. And I think that the speed of that speaks for itself, that the world wants to go there and the investments are going in there, and hence the production of these kind of stuff happens. Do you see that with hydrogen? I mean, obviously you've done all your research and you've talked to many sources. Are you seeing that coming through, or are they a bit slower in that sector?
I think the real efficiencies on the power generation side took 20 years. And there was a lot of resistance as well, and that no one was sort of really focused on. It was a bit of a niche market. When you talked about renewables 20 years ago, people thought you were a bit of a kook. But these days it's absolutely mainstream, and you'll see that all of the massive big manufacturers are looking at this technology and putting billions of dollars into research and development on this side. But not only on the hydrogen production side, also on the transport of hydrogen side. So currently, if we were to turn on a hydrogen plant at the moment, if we were going to export that any significant distance, the only product you'd probably realistically be able to make would be green ammonia. But over the next probably 5 to 10 years, I think what you'll see, and Kawasaki Heavy Industries have already sort of moved into construction of a liquid hydrogen ship. So when the LNG was first proposed, people thought that they'd never be able to do it. Obviously they did, and they do it every day now successfully, safely, cheaply, efficiently around the globe. And I'm almost guaranteed 100% that's what you're going to see with liquid hydrogen over the next 5 to 10 years.
Moving on, I guess you've touched on the product itself, green ammonia, liquid hydrogen. I mean, it's one thing to say, yeah, we'll produce hydrogen, but what are you actually producing, right? From province? I mean, I'd like to go into the business a bit later, but I guess the products that come out from it, what is it? Obviously, you've mentioned green ammonia, but what is the product?
Yeah, the main product, obviously the product that comes out of the electrolyser is hydrogen gas. So then you can either move hydrogen around in various forms, compressed hydrogen, liquid hydrogen, green ammonia, other organic compounds as binders or holder of the hydrogen. There's even a solid hydrogen technology around that's sort of being developed at the moment. So various forms of energy storage and transportation of the hydrogen once you've made it.
So when you say from your business point of view, are you a Woodside produces gas and you've got BHP oil, crude oil? Is that where you guys sit, or are you guys can pick and choose what product you make?
Yeah, look, I think it depends on how far you want to transport it. Obviously, for domestic market, compressed hydrogen would be sufficient to be able to move hydrogen around, probably into either the gas pipeline, which is very close to us, the Dampier to Bunbury National Gas Pipeline. And the West Australian government wants to see 10% green hydrogen in that gas pipeline by 2030. So obviously we sit right on the gas pipeline. So the ability for us to put compressed gas into the pipeline is there, and also for other potential domestic off-takers. If we were to export, and this is a large project, so to be built in phases, the initial phases would be aimed at domestic, and final phase, which is 8 gigawatts, which is around 500,000 tonnes of hydrogen per annum, is quite a large project. So at least some of that would be for export. And if you were to export it, let's say 2 to 4,000 nautical miles, Singapore, Japan, South Korea. You could probably do that efficiently and effectively, cost effectively with compressed hydrogen. Any further than that and you would either need green ammonia, some other form of organic carrier, or liquid hydrogen.
Okay. Now, going into your business, I mean, Province, I remember seeing your name pop out, and I didn't sort of vaguely thought that you were involved, and I didn't sort of quite follow. And then I did a bit more research. It's very intriguing. It's not your typical find a tenement and then you go and explore for minerals and then you do that, right? So it's similar in the scheme of things, but it's different. Can you run through that with us in terms of what is the business and how it works?
The business is really access to land to generate renewable power, and then obviously you have your downstream production of hydrogen and distribution network, whether it's compression, piping, shipping, whatever that is. Currently, there is no clear framework or legislation or guiding framework for hydrogen in the country, basically. So there's no hydrogen tenement, if you like. So obviously the West Australian State Government, which is the only one I can really speak for, having had a lot of discussion with those guys, they're working very busily to put that framework in place so that we can go ahead and develop these projects. What on the back of that also needs to happen is the fiscal regime that we operate in, so is taxation, royalties, whatever that looks like, so that we can go ahead and finish feasibility studies.
That's interesting because they're not sure even how to put a royalty on you.
Not yet. It's coming.
It's
coming.
coming.
For taxes, no. There's certainty it's coming.
That's true.
It's just how much and how it's applied.
Yeah.
Obviously, nascent industries like this need some sort of a kickstart. And I think and coming from the EV side in Europe, where we were privileged to see and be part of the real mass ontake of EVs. So EVs were sort of trickling along, not doing very much, spinning their wheels, until the government basically legislated that there would be no more internal combustion engines by 2035 in Germany, and then other various dates around that for other EU member states. So I think that the auto industry sort of went, really? And the government said, yep, that's it. So within a month or so, Volkswagen came out and said they were going to make 20 new models of EVs. So it's really takes that strong government intervention and policy and legislation to change the way that industries behave, because they have to. I think you're kind of starting to see that as leaders again in Europe, obviously. That carbon tariffs imposed on CO2 production. So I think you'll see that Europe's driving this pretty much, I wouldn't say single-handedly, but there's lots of laggers, let's say, about the globe, people stepping up to the Paris Agreement, etc., and whether they're going to join it or whether they're not going to join it. I don't think they'll have a choice in the end, because they'll be forced to by cost of doing business.
Yeah, I think that's the key, is that eventually everybody has to go. As we were discussed just before we started the shooting, it's just another form of tariff that will come.
Yep.
And they'll say, if you're not like this green or that green, then you have to pay this.
Yeah, well, you can imagine you're a grey hydrogen or even blue hydrogen producer, and you're producing 9 tonnes of CO2 for every tonne of hydrogen you make. And I'll just wait till the mower goes. And then you want to export your product into the EU, and they say, well, that's great, no problems, we'll take it, but we're going to charge you €50 a tonne for every tonne of CO2 you make. Yeah. So your product no longer becomes competitive with other products, so i.e. green hydrogen.
Yeah, I think that's the thing about all this, this new phase, this new revolution, evolution that we're going to, is that it's now whether it's no longer whether you want to be green or you want to be electric. It's how much you want to be, right?
Yeah.
And even all the miners, I think I can see them changing quite quickly. Once there's a fleet of diggers and a fleet of but when they have a fleet of four-wheel drives, you're just doing the same process but less emissions, I guess.
That's right. Yeah. Yeah, look, and I think there is a lot of drive. The ESG push globally is now coming very strong, and you're seeing investment funds now being mandated that they can only invest in certain things. So they're scrambling around the globe looking for these things to invest in, and it's it's coming very, very hard and very fast. I mean, also insurance. People saying, well, if you're not transitioning fast enough, then you're uninsurable. I mean, there's examples of that from coal in Germany. So, yeah, it's absolutely coming.
Yeah, I think it's interesting. Like from your experience with the money side of things, and maybe you want to share your 3-hour fundraising process, because that's I think is very important, because that's, and you touched on the money. They can only fund on certain things, and people don't realize how much money is sitting on that side and nothing much to invest, right?
That's right. Yeah, look, the ESG funds and sovereign funds out of Europe, pretty much they're mandated. They can only invest in certain things, and fossil fuel is absolutely not one of those. But it's not just those, it's also the mainstream very large institutional funds now that the LPs, the lending parties, are saying, well, here's our money, but we're only going to give it to you to invest in certain sectors. So they are madly scrabbling to look at things to invest in. So when we went to raise, we're only going to raise 10 million with potential 5 over, just to get us enough to get through the feasibility study. I had 57 meetings in a week and a half, purely because, and we were the first ASX hydrogen company, so there wasn't really many other things to look at the time. So we had, pretty much any institution you can imagine or bank, and they were on the call. So it's lots of an educational process as well, and this all takes education, and not just people looking for investment things to invest in, but also an education process. So is this sector real? Which companies are real? Which projects are real? So the reason that we did take 18 million in the end. We got 45 offered in 3 hours, so we obviously had to close the offering very early. But then we extended it to let in a couple of true ESG funds. So that was why we took a little bit more than we were originally going to.
Okay. Because it's one of those things. The ESG thing. I remember, and I've said this a few times now. It was a murmur maybe 10, 15 years ago, and then maybe 5 years ago, people were saying, oh, the words came up a bit more, but you sort of say, oh, well, yes. And then 2 years ago, it's like, oh, it's come up more often than not, and now it's it or not.
It's front and centre. It's main stage. So, we're one of the first companies to actually report our ESG as part of our corporate governance and our quarterly reports, annual reports. So we report ESG quarterly, and it's a journey. So when you start your ESG journey, you have a baseline. This is where we are now, and then you try and build on that ESG theme as you move forward. So each quarter you try and achieve a few more ticks in the boxes. You've got more diversity, you've got more gender diversity, more women in the company. You're looking at traditional owners as part of your business, and all of these kind of things add up into making a true, global ESG company.
Going back to your business, I had a conversation with someone. We were talking about how your business is and what would the risk involve, what's going to sort of be the stepping stone or the deal breaker. You have tenements along the coast of Western Australia, which you will use to build renewable energy, being solar and wind at this point in time, I'm guessing. And then, so that's funded by Total, which you can probably add a bit more later. So that's fully funded in a sense. Yeah. And then you have the hydrogen business that will be drawing that power, which then is also, obviously there's a compliance issue with the government and feasibility, etc. Maybe you can sort of explain on that as well. Would that be correct in sort of, if I had to draw a schematics of?
Yeah, I think that's reasonably accurate, Noel. So essentially, as first movers, and as I said, we were the first green hydrogen company on the ASX, so we had rest of Australia to choose from. So we looked at where the best place, and it's all about acreage to generate renewable power, and you need a lot of area to do that with low competing land use. So Carnarvon, which is where the project is the fourth windiest place in WA. The other three are Rottnest, Augusta and it's near Dunsborough, so the chance of building a very large infrastructure project there is pretty much zero. So the beauty of Carnarvon is it's on the coast. It's got limitless amounts of seawater for the process. And lots of area with low competing land use, so we can build lots of turbines and a bit of solar there as well. So when we identified, and we kept coming back to Carnarvon for lots of reasons. Obviously it's generative capacity, but also existing infrastructure. The gas pipeline, North Coast Arterial Highway runs right through it, and having built large infrastructure projects in the middle of nowhere with no roads and no bridges, you've got to do all that first. Very capital intensive, very time consuming, and often quite dangerous conditions sometimes as well. So having a main highway running through the project is bliss, basically, to bring all your material in. So the project itself, when we were looking at it, obviously and there are dozens and dozens of green hydrogen companies coming to market almost every day, but most of them are small. And the thing that sets us apart and why we looked for something that would move the dial as a big project is our partners, basically. So Total Eren, which are global leaders in renewable power generation, 34% owned by Total. Sitting in the background, the supergiant oil company, one of the largest oil companies in the world, madly trying to diversify to green. And they've publicly said that they want 40% of their $250 billion US revenue per year to be green by 2050, and that's a massive thing. So they're spending enormous amounts of money and doing lots of development research to get them to that point. So knowing that what I wanted to do was technically de-risk the project, so having Total Eren in there to do the power side. We're not power generators, we wanted an IPP, independent power provider, to build the power station. So they will design, own, fund and build the power side and then sell power to the joint venture. So sitting on the other side of the fence, which is the hydrogen production and distribution network, which is 50% owned by us and 50% owned by Total Eren. So that takes away basically a lot of the funding risk as well. And then there's the offtake side. So obviously sitting behind all of that is Total Energies, with their global distribution network and offtake already in place, and they're obviously trying to transition their existing energy customers to greener products. So those three things, without those you don't have a project. So financial, technical and offtake, de-risking. So that's pretty much why we wanted a partner like Total Eren involved.
I mean, that sounds almost total de-risking, not a partly de-risking.
Well, we did our best to do as much as we could. So yeah, and then it all really comes down now to the governments. I mean, Western Australia is working very, very busily to provide the framework and give us a place to operate in and develop these projects. Federally, not sure. Obviously, there's a lot of talk and a lot of media around the moment about, I'll use the word recalcitrance of the Australian government, which has been used in the past, not so effectively. But look, and I think the shoe might be on the other foot now. But whether Australia, I mean, it'll have to commit to the Paris Agreement at some stage, regardless of the fossil fuel lobby on the East Coast. So I think we will see changes. We're hoping that they're timely changes, because the biggest problem we've got, and Australia has got, is that having been a desert and a place of burning fires and floods and things for so long, and that not being a benefit, finally we've got something that we can wave our flag. We're one of the top 3 renewable generation capacity countries in the world. If we don't take that opportunity to make that our leading cause and our leading product, then basically what will happen is someone else will do it, and they are doing it elsewhere. Our industries are saying they're going green and they will buy the product, and if they get long-term offtake from somewhere else before we've managed to get our industry in place, then it's lost forever. So Australia just becomes a big quarry, basically, with nothing else to gain.
I mean, the federal government has used the words Hydrogen Valley as opposed to Silicon Valley. That sort of gives me that fuzzy feeling that they'll more than likely go down this road. From an investor point of view. Yeah,
I think they were very careful to use hydrogen rather than green hydrogen.
Yeah, well, I mean, obviously that's going to, again, we sort of talked about, obviously green's going to be more expensive, etc. But I think ultimately the flow is going that way as opposed to the opposite direction.
Yeah, look, I think it's all about the time that it takes to get this legislation in place. Other countries are making it more permissible. Yeah. So, and the other thing about a clean hydrogen, and I think it's a term that's been used quite a lot, is obviously carbon storage and sequestration from blue hydrogen, which obviously I think it's been proven doesn't work at large scale. The issue we've got with that, and I'll come back to your point about green hydrogen being more expensive. And currently, if you were going to turn a green hydrogen plant on a small one, it would actually absolutely be more expensive. But what happens when you scale these things up to large projects is they become much more competitive. And then also once you add in the carbon tariffs, which are going to be imposed by pretty much everyone else in the world that matters, then they become cheaper, actually, than the other types of hydrogen.
I mean, it's good that you brought that up because you reminded me about whether it's it depends on what hydrogen you're talking about, because there are solar panels and there are solar panels, as we mentioned, and I just read recently that there's now talks about where the solar panels come from and how they were made, and a lot of these panels were made with coal energy, as opposed to others that are not made. And eventually that's going to be, as you said, how much it's going to cost you. It's not in dollar terms, it's in terms of carbon credits and your emission, and where the investing money is going to come from, because they're the ones that say, hey, our mandate is only green, yours is not.
Yeah, and the ultimate goal for all of these projects is that the whole supply chain is eventually made with zero carbon, or as close to zero carbon as you can get. If you're using coal and fossil fuels to produce the materials that you're going to build your plants with, then obviously there's a massive carbon footprint before you even start. So, and it'll take quite some time before it transitions to the new fuels, zero carbon fuels, to produce the products that become zero carbon and move into zero carbon production industry as well. So, I mean, the iron ore industry, for example, which is one of the largest producers of greenhouse gas emissions, 12-13% of greenhouse gas emissions come from steel production. So you'll see some steel companies now talking about going to green steel, which is great, but they've got a long way to go to balance the ledger. So it's a good that they're talking about it, but they actually need to do something and get on with it.
Yeah, I mean, I'm sort of a headline reader. If you read something 10 years ago, 15 years about zero emission or low emission and everything else, you think, oh yeah, that's a bit much, boys, But now when you read the headlines and you get that feeling, is that this is more a reality than not now. It's a possibility as well as people thinking that the reality is more truer today than never. Yeah. And I think what you mentioned about the funding, that makes it more reality, right? It's a bit like if everyone's got the money and only wants to fund this, the efficiency speeds up. Well, the path to efficiency speeds up.
Yeah, look, and it's one of those we're living through a change, one of those paradigm changes, like from wood to coal, wood to oil, those kind of things. Now we're going from fossil fuels to renewables. That's the kind of thing we're living through. There'll be naysayers and there will be people who don't want to change because it hurts the bottom line. But I think what you'll find in the end is that they'll be priced out or pushed out of competition in any case. So if they don't transition fast enough, then it'll be a dying industry.
So from an investor point of view, obviously you guys had that, I looked at your chart, the big run, and most people go, oh, I've lost the run, and they've made all the money, and etc., etc. Going forward, what will be there for, and what will entice the guys to come in and say, hey, maybe, I think you're at 13 cents or something, 14, maybe this market cap of 150 million is not that expensive. What would be that for these guys, the investors out there?
Yeah, it is a big project. So full build is around $14 billion. So it's a big project. And we've got 50% of the downstream production facility of that. So moving forward from now, obviously we're moving through scoping studies. Positive scoping study would lead straight into feasibility. And then probably 18 months to 2 years of environmental surveys, approval permits, etc. And then hopefully, final investment decision on first phase. Not sure how big that'll be yet, depending on the scoping study and sizing of that, depending on pricing. And then obviously, we'd start to build the project in a couple of years' time.
Okay. And obviously, looking at market cap 150 million today and full bill is 14 billion or something. somewhere in the middle, somewhere would be a nice price for investors going in, I guess.
Yeah, the thing about these projects is they are very large, and there's a company that people probably know about, which is Vulcan Energy, which was kind of like us, sitting around 12, 13, 14 cents, etc. But once you prove that your technology works and people understand the project, the rise is almost exponential. There's a lot of upside left in the stock.
So from a downside, a naysayer looking at you guys, what's the deal breaker for you guys? What's going to make you guys go, oh, this is not a good thing? What is that? Is there one? I mean,
not that I can see. The only thing that would kill this industry would be government. Yeah. The demand is exponential for green hydrogen. Asia and Europe are spending trillions on infrastructure to be able to accept green hydrogen over the next 10 years. It's all going towards green hydrogen. The only thing that can kill it is legislation, or lack of legislation on the government side for us to drive a nascent industry forward, provide the pathway to success. Basically, that's what we really require, is a long, strong leading foot from government.
I mean, guys, this is one of those projects where when I looked at it, the more I looked at it, I can't see, as Dave sort of mentioned as well, it's quite hard to see a negative. But, there's no such thing as a sure thing. But, this one you've got to do your research and figure it out. But I think, it's a very interesting thing. So, as always, I ask you guys to reach out to David, and I'm sure he'll answer your questions, and it's a new industry, lots of news to be coming. Dave, thanks for sharing with us and educating us on green hydrogen and the hydrogen space, because I must admit there's not a lot of this out there, and there's a lot of discussion about hydrogen, and then you hear this green and you hear this blue, and you're going, well, what does that actually mean, but I think that's good, and I look forward to maybe having a chat more. And
yeah, sure, anytime.
And I can see you guys are putting all the pieces together. You got a new appointment of a guy. But again, thank you, Dave. And
thanks, Noel.
Let's have a chat further down the road.
Yeah, okay, great, thanks.
Thanks.